up, dude. Run it up. 777, do you matter? 777 tone. There you go, bro. Yeah. Elias says, here we go. Borrow ETH on compound for 1.92 and lend for 2.08. That's 0.16% for doing nothing. Yep, dude. That's why you here, B. Come on. Get the ideas out. Get the ideas. Let's get the ideas out. More ideas, more better. Okay, so multi-time frame breakout. So these are breakout strategies. Combines breakout strategies across multiple time frames and filter false signals and increase the accuracy of breakouts. Execution steps: identify key levels, determine support and resistance levels for or trading ranges on multiple time frames, e.g. like the 4 hour, the 1 hour, and so on. Ensure the breakout is supported by significant volume. Confirm across time frames. Only enter a trade if the breakout is confirmed across multiple time frames. To enter trades, enter a long position when the price breaks above resistance across multiple time frames. Short, enter a short position when the price breaks out across multiple time frames. That's interesting, actually, to look at multiple time frames when looking at breakouts instead of just like one. You know, I think a lot of people just start with one, including myself. Set stop loss. Place stop loss orders significant or slightly below the breakout level. Take a deep breath. Somebody just lost 44K. All right. Volatility breakout with ATR. Use the average true range to adjust breakout levels based on market volatility. Calculate the ATR. Use a 14-day ATR to measure market volatility. Set breakout levels. Determine breakout levels by adding / subtracting a multiple of ATR to and from recent highs and lows. Enter trades. Enter when price exceeds the high plus the multiple. Yo, the chopper just took him out. He just took that boy out. He had to rescue him. It's done for him. He lost 579K. What would you do today if you lost 579K, my dude? I don't know. I would be hot. I don't think I'd come back. I don't think I'd ever play this game again if I lost 500K like that on a liquidation. I'd be done, though. Enter trades. Enter when the price exceeds the high plus the ATR multiple. Enter when the price falls below the low minus the ATR. Place stop loss. Set stop losses based on a fraction of the ATR to prevent the premature exits. Adjust for volatility. Regularly adjust breakout levels based on changes in the ATR. Strategy 3, false breakout reversals. Identify false breakouts that revert back within the trading range shortly after breaking out. Execution steps: identify key levels, determine significant support and resistance levels. Monitor breakouts. Watch for breakouts that fall or fail to sustain beyond the breakout level. Confirm false breakouts. Confirm the volume and price action signals such as long wicks or rapid reversals. Enter reversal trades. Enter long positions when a false downside breakout reverts back above the support. Short. Enter short positions when a false upside breakout reverts back to below resistance. Set tight stop loss. Use tight stop losses just outside the breakout levels. Profit targets. Target middle of the range or next support resistance levels. Value trading strategies, fundamental metrics and price divergence. Utilize fundamental valuation metrics to identify divergences between market price and intrinsic value derived from blockchain metrics. Evaluate fundamentals. Analyze metrics such as transaction volume, active addresses, and network growth. Identify price divergence. Compare these fundamentals to market price to spot undervaluation or overvaluation. Enter trades based on divergence. Enter long positions on assets showing positive fundamental growth and price lagging. Enter short positions on assets showing negative fundamental indicators but price leading. Set stop loss. Place stop losses based on percentage deviations from entry points. Review fundamentals regularly. Regularly assess fundamental metrics to adjust and close position. Mean reversion to intrinsic value. Capitalize on deviations from an estimated intrinsic value based on historical relationships and statistical analysis. Execution steps. Determine intrinsic value. Use historical price ratios, revenue multiples, or other valuation techniques. Identify mean reversion opportunities. Track assets that deviate significantly from calculated intrinsic value. Enter the trade. Buy assets significantly below intrinsic value. Sell assets significantly above intrinsic value. Set the stop loss. Use standard deviation based stops to mitigate risk or manage risk. Objective profit targets.